Hi folks, I'm Ryan Donovan. I'm CUNA's Chief Advocacy Officer, and I want to take a few moments to talk about a small but growing trend in our sector: credit unions buying banks. While still relatively rare, the number of credit unions acquiring bank assets is trending upward. We need to help policymakers understand that this trend of credit unions purchasing banks is something that advances the communities that their constituents live, work, and thrive in. It's no secret that the increasing compliance burdens have complicated the operating environment for credit unions and banks alike. That burden is felt more forcefully at smaller institutions, and as a result, many small institutions, banks and credit unions, have had to address the future of their operations. While some look to close their doors, the best case scenario is for an institution to merge its assets with another, ensuring that the service to members and customers in the community continues. Unfortunately, that doesn't always happen. The consolidation of the banking sector has in some cases resulted in the creation of banking deserts when merger partners choose not to serve rural and underserved communities. Between 2004 and 2018, banks have closed over 10,000 branches, creating a net loss of 1,700 bank branches, as well as 86 new banking deserts. This has made it harder for U.S. consumers to access local financial services. With that in mind, it's important that banks exiting the market have a wide range of options, including the option to sell to a credit union. You know, over that same period of time that banks closed so many branches, credit unions have been expanding services by opening thousands of new branches across the country, with more Americans than ever choosing credit unions to be their best financial partner. For credit unions that have a mission to promote thrift and provide access to credit for provident purposes, it makes sense to be willing and viable partners to bankers seeking to exit markets. Allowing credit unions to take on bank assets benefits everyone involved: the consumer, their communities, the bankers, and the credit union. Consumers benefit by gaining access to strong, responsible, community-focused financial services. Communities benefit because credit unions provide, based on our analysis, more than $18.9 billion in direct and indirect consumer benefit annually, especially in underserved areas that often have no other affordable option for financial services. And clearly, the bank investors benefit too. But you know, it's easy to malign the bankers who are selling assets and exiting the business, but we've actually talked to a number of these folks to better understand why they chose to sell to a credit union. And certainly price was a factor in their decision to sell, but it wasn't the only thing that they considered. Nearly 90% of these bankers indicated they chose a credit union because they felt there was a greater likelihood that the employees that they've worked with would be retained. More than 60% said it was a better cultural fit that drove the decision, and for about half, they saw the transaction as an opportunity to preserve the legacy of service in their community. A similar number indicated that they felt there was a greater likelihood that the branches that they had would remain open. The bottom line is that the bankers who have been a part of these transactions understood that the credit union was engaging them in fulfillment of the credit union mission, and they chose the credit union, at least in part, in the interest of their customers, their employees, and the communities that they served. Credit unions have a great story to tell about how we're helping people preserve access to local financial services by partnering with banks that are ready to exit the markets. Most of these transactions are being conducted by credit unions that are low-income designated. They're helping to keep branches open, they're keeping bank employees, and they're working to retain bank customers as credit union members. This is a story that we need to tell policymakers because the human impact of credit unions purchasing bank assets will help them become more comfortable with what is still a small but growing trend in our sector.